Mic test 1 2 3.
Test 1 2 3. Mic test 1 2 3. All right, good. I think the audio is back already. My apologies for just a slight technical glitch earlier on. So very good morning to all. I'm Kelvin here. Welcome to today's Daily Dose of Market Insights. Today will be a brand new week, 21st of April 2025. All right, so before we jump straight into the gist of today's Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. Any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we jump straight into the intraday technical outlook on those broad-based cross asset classes, i.e. the major dollar pair, the major stock indices, and as well as the two key commodities market, which is gold XAU/USD and West Texas crude oil, let's have a recap what has taken shape over the Easter holiday, that means from Friday, and as well as anything that is pertaining to be the potential impact on the markets today due to the weekend news flow. Right, so let's start with before we went for a short break on last Friday, what are the key events that took place in the market in terms of economic data release and as well as news flow and as well as their impact on the related broad-based cross asset prices intraday movement. So let's start with the last Thursday. So last Thursday over here, as you could see on my screen, all right, is we do have ECB monetary policy meeting on last Thursday. So ECB monetary policy meeting, they cut the deposit rate as expected by 5 basis points to bring it down much lower to 2.25% from 2.5% over here. All right. So and so they mentioned in their guidance that rates are no longer restrictive over here. Wait 1 second. I think green is hang again. I'm not sure what's going on. Okay, rates are no longer seen as restrictive, and ECB President Lagarde stresses the need for agility, basically agility, that means flexibility, and as well as trade turmoil to wait on growth. So it's more like a bit much of a growth concern over here, and because of this growth concern, market participants now are actually anticipating more policy easing in the months ahead. All right, but however, due to the fact that we know that in FX market things are relative in nature, even though the ECB, we call it latest so-called statement and the latest press conference after the conclusion of last Thursday ECB monetary policy meeting, where ECB Lagarde emphasized risk to growth, that didn't stop the euro dollar from appreciating against the USD. So as we are speaking right now, we notice that the 5-day rolling performance, as of now we are speaking on the major dollar pair versus the other major currency, that means i.e. the 5-day rolling performance of the US dollar against other major currency. As we are speaking right now, the dollar has weakened across the board over here. So in fact, the euro dollar is one of the top performer, that means i.e. the dollar depreciate against the euro by negative 1.6% based on the 5-day rolling performance basis. And the best performer among the FX space is the yen, where the dollar depreciate against the yen by negative 9.4%. So it seems to us that right now there is across the board dollar weakness, and what causing across the board dollar weakness is because over the weekend there's actually this news flow stating that Trump right now is actually studying the option to actually remove the current Fed chair Powell, due to the fact that Trump is pretty much so-called not happy with Powell's performance, as in Powell's lack of reluctance to be much more dovish against with other major central banks, because right now Powell and the rest of other Federal Reserve officials are still more concerned about sticky inflation due to the fact of that trade tariff policy advocated by the current White House administration. So Trump now is looking possibility in how to remove Powell before his term end, and because of this, that causes uncertainty in terms of the key financial, we call it a policy making agency in the US. So we know that the Fed has been independent of the White House administration. Any sudden removal of Powell deem a kind of uncertainty among market participants on how monetary policy is to be driven in the future, and that causes a bit of we call it weak sentiment towards American-based asset. That means there was actually a sell-off in the dollar as we're speaking right now because of this uncertainty that the Fed independence may be eroded by the current White House administration, which is not good for the long-term economic growth of the US economy, given the fact that right now monetary policy may be driven by we call it fisc White House administration to dictate how monetary policy is to be run. So that could actually lead to what I call really because the Fed goal is to maintain independence and is to actually achieve stable growth through stable inflation growth, and from there it will lead to stable economic growth. All right, so we know that the fact that tariffs is inflationary in nature, and if the Trump is able to succeed by removing Powell and getting someone who is much more dovish to kickstart interest rate cut, that may actually really put what I call it a situation where sticky inflation starts to revive in the US economy, and that could potentially increase the risk of stagflation. So that's why the dollar is actually depreciating across the board as we are speaking right now. And with this dollar selling off, you also come into the sell off of the E-mini S&P and Nasdaq 100 futures as well. So we know that the US stock market went for a break on Friday, and in today's Asia session, the E-mini futures has started to trade as we are speaking right now. So the S&P E-mini futures is down by negative 0.9%, and also the same magnitude by the Nasdaq 100 E-mini futures, also down by negative 0.9% as we are speaking right now. So what we could see right now over here is risk off in terms of the major stock indices E-mini futures in the Asia session, driven by the fact of a weaker dollar across the board, caused by uncertainty that the Fed independence may be get eroded by Trump's administration, which does not gel well for the longer term health of the US economy. So market participant now is a lack of confidence in US based asset. So that's why we see a synchronized sell off in the E-mini Nasdaq and 500 S&P 500 E-mini futures sell off in line with the sell off in the US dollar over here. And also bear in mind that over here is that over the weekend there's this positive news flow saying that Trump is now getting unreluctant to actually reluctant to keep rising tariffs on China, but market is not picking up this positive news flow and instead focusing on the fact that Trump insistence of finding options or finding ways to remove Powell before his terms end. So that is rather risk off in nature in terms of the sentiment on risk assets, which is the stock indices. In turns also starts to drive another round of dollar weakness across the board. And with this dollar weakness across the board, what we could see over here is that the gold continues to rise over here. So if you look at XAU slash USD in terms of gold price right now, let me share with you guys over here. Okay, so go print another we call it a fresh all-time high in today's Asia session, 3,385. Okay, 3,385 over here, added in 1.79%. Okay, 1.7% for that as we are speaking right now. All right, so with that, that sum up the very quick and concise news flow and their impact on the various cross asset classes based on the event that has taken shape on last Friday and over the weekend. So with that, let us now focus our attention to the second part of today's daily dose, which is the intraday technical analysis on the various broad-based cross asset classes, starting with the major dollar pair first, which is the IE, the FX market intraday technical outlook. But as usual, let me expand my screen so that you guys have a better view of the charts. All right. So I believe that everything is fine. Okay, good. Let's start with the euro dollar. So still recall euro dollar last week or the entire of last week, we do have a trend bias on the bullish side of the story due to its positive technical element that is still intact on the euro dollar. So the euro dollar continues to squeeze up in today's Asia session and hit our resistance zone that we mentioned on last Thursday before we go for our Good Friday break at 114.80/115.20. So with that, now the RSI now has already hit a extreme overbought level, and this extreme overbought level is the most in almost 3 months over here. All right. Okay, this is a rather extreme overbought level, but there is no signs of a bearish divergence as being depicted on the RSI, because RSI continues to shape a higher high. Okay, after this very strong push up in today's Asia session. So with this extreme overbought level that is not seen in the this is the most in the last 3 months at 89.10 over here, there could be a risk of a minor pullback during the European session because of this extreme overbought level. So a minor pullback first support level to watch thereafter will be at 114.10, maximum 113.40. So that will be my Titan key short-term pivotal support for today. So which is last Friday or last Thursday US session low 113.40. So as long as the minor pullback didn't the potential minor pullback that may take shape due to the extreme overbought reading in the hourly RSI, that's the most in the last 3 months at 89 level, don't surpass below the Titan short-term pivotal support at 113.40, we'll maintain that intraday bullish bias for today on the euro dollar. Next intermediate resistance level to watch will be 115.80, followed by 116.60/116.90 next, which is a Fibo extension cluster level as well, taken from the latest minor swing low of 16th of April. Project it up at towards the low of last Thursday US session low that coincide with the 2-time Fibo extension. Right over here, only an hourly close and a breakdown below 113.40 Titan short-term pivotal support for today that will invalidate today's intraday bullish bias to potentially kickstart a minor mean reversion decline scenario, exposing the next near-term support level at 112.70. A breakdown below it potentially may see 111.20 next, which is the key pullback support of that former long-term circular descending channel resistance that has been broken out decisively on 10th of April previously. So i.e. in a nutshell, still maintaining that potential intraday trend bullish bias on the euro dollar as long as the Titan 113.40 short-term pivotal support holds for today. Next up will be the sterling dollar. So the sterling dollar also rallied in similar fashion with the euro dollar. So with that, it also hit our first resistance level that we mentioned on last Thursday at 133.70. 133.90. So with that, the hourly RSI now has already also reached a extreme overbought level, but not as extreme as the euro dollar. So it's still below the peak that is being seen on 3rd of April at 86.9. So right now it's at 85.15 over here, but it's also considered as a rather overbought. Okay, rather overbought over here, a rather extreme overbought. All right, so given this highly overbought reading on the hourly RSI, there could be a risk of a minor pullback over here. So minor pullback, first support level to watch will be 133 133.15 over here, which is the meeting line between 21st of April and 21st of April intraday session, and as well as the minor pullback support of this previous medium term ascending channel resistance now turns into a pullback support over here after a bullish breakout that is seen in today's Asia session. All right, so as long as this minor pullback didn't surpass below a tightened short-term pivotal support that I have for today, which is 132.60, which was last Thursday US session low, we'll still maintain that intraday bullish bias on the sterling dollar. Next intermediate resistance level to watch will be at 134.35, followed by 134.80 next. Only an hourly close below 132.60 will potentially invalidate today's intraday bullish bias to potentially kickstart a minor mean reversion decline scenario, exposing the next near-term support level at 132.05, followed by 131.20. So i.e., as long as this Titan key short-term pivotal support holds at 132.60, potentially the minor bullish bias trend in the sterling dollar may continue. Up next will be the Aussie dollar. So the Aussie dollar continues to push up, and right now is testing our key medium-term pivotal resistance at the 64-figure level over here. So just a recap, what is the 64-figure level? Why is it so important? So if you go to the daily time frame chart of the Aussie dollar, this 64-figure level is our medium-term pivotal resistance level. Why is it important? Because in the previous three occasions, on the 21st of February, on the 17th of March, and most recently on the 3rd of April, which is the start of this month, every time the price hit this 64-figure level, there's a bearish reaction of it. Right, so right now it's testing this level, and this 64-figure level is the former major ascending trend line range support that was previously in place from the 13th of October 2022 low. All right, over here. So right now, given the fact that we start to see across the board dollar weakness on the so-called major dollar pair. So given the fact that even though the Aussie dollar has a tendency for it to react negatively when there is a risk off sentiment in the major stock indices, that is especially the US stock indices, the Aussie dollar is not reacting to that risk off that's being seen right now in the major US stock indices futures market, which is having a weaker session in today's Asia session, where I mentioned at the start of today's daily dose, the S&P E-mini and the Nasdaq 100 E-mini futures is down by negative 0.9% in today's Asia session as we are speaking, which is over here. But the Aussie dollar now is having a much more positive reaction with the broad-based dollar weakness that's being seen among the major currency. So with that, we will have a neutrality stance right now, despite the fact that it's testing that 64-figure level, and also the RSI is not showing any bearish divergence. All right, because we start to see a latest RSI, which is a higher high as it hit the overbought reading as we are speaking right now. All right, so given the lack of negative elements on the hourly chart of the Aussie dollar, we prefer to have a neutrality stance for today. So neutral between 64-figure level, which is the medium-term pivotal resistance, and the lower limit will be last Thursday intraday low that managed to get retested on last Friday minor low as well, which is acting as an intermediate support at 63.35. So neutral between 64-figure and 63.35 on the Aussie dollar for today, unless we start to see an hourly close above 64-figure level, then potentially we may see a squeeze up to retest the 200-day moving average that is now acting as the next intermediate support at 64.70 next. Right, so that's for the Aussie dollar. Flipping to a neutrality stance for today between 64-figure and 63.35. Lastly will be the dollar yen. So dollar yen plummeted down as expected and broke below our first support level at the 141.70 and is now approaching last September swing low area at 140.30, 140 figure level, which is the 1.236 VWAP extension. Then let me take you back in time. Yeah, so this is the last mid-September or 16 September 2024 swing low, medium-term swing low area. So what I could see is that the dollar yen now has plummeted down to almost a 3-year, so-called 6-year low and the plus 6-month low thereafter. So with that, the RSI now is also in deeply oversold territory at this 8 points. Right now the reading is 11.2. So this is the most extreme oversold reading in the last 3 months. So given this extreme oversold reading, but the lack of a bullish divergence, at least during the European session, there could be a minor bounce taking shape. So minor bounce, first resistance level to watch for sure last Thursday minor swing low that has been decisively taken out in today's Asia session, now turns into an intermediate pullback resistance level at 14170. 14174, 14174, and I don't use 14174 as my Titan short-term pivotal resistance level just in case of any whipsaw. I will use a slightly higher level at 14270, which is also the this lower minor high that is being formed on last 18th of April, last Friday, last Thursday US session high. Okay, so using last Thursday US session high, which is the latest minor lower high over here. This high lower than this high. 14270 Titan short-term pivotal resistance on the dollar yen, and we will still maintain the intraday bullish bias in any form of any pullback that may take shape intraday. Okay, pardon me, let me repeat everything again about time twisting. So given the fact that is the hourly RSI is coming close to a extreme oversold level, which is now at 11 what's the current level, 8.7, which is the most oversold level in the last 3 months, there could be a risk of a minor bounce taking shape on the dollar yen. So minor bounce, first intermediate pullback resistance to watch will be 14170, which is the former minor swing low of last Wednesday US session low. But I don't want to use this low as my title. I don't want to use this first intermediate resistance at 141.74 as my Titan short-term pivotal resistance, just in case of a day whipsaw. I will use the last Thursday US session high, which is this minor swing, this minor lower high, 14270 will be my Titan short-term pivotal resistance for today to maintain the intraday bearish bias on the dollar yen. After 140 figure level may expose the next support level at 139 figure slash 138.70 next. Only a push up and the hourly close above 14270 short-term pivotal resistance level, a Titan one for today, will invalidate today's intraday bearish bias to potentially kickstart another round of minor mean reversion rebound scenario, exposing the next resistance level in near term at 14410, followed by 14510 next. All right, so that's for the dollar yen, still maintaining the intraday bearish bias with the risk of a minor, we call it relief rebound that may take shape. As long as this relief rebound didn't surpass above 14270 Titan short-term pivotal resistance level, we will still maintain that intraday bearish bias on the dollar yen. Next up will be the major stock indices, starting with the Asia Pacific, which is the Hong Kong 33. So bear in mind that Hong Kong 33 or the Hong Kong 33 is actually the proxy of the Hang Seng index futures. And given that the Hang Seng market is closed today for Easter Monday, previously on last Friday or last Thursday, I would say before we go for a Good Friday break, we still have a short-term pivotal resistance at 21,450. So price action still unable to break this 21,450 during on the Thursday's Asia session and the last Thursday US session as well. So last Friday the market will close because of Good Friday, and today will be also closed for Easter Monday. So no change. These are the key levels to watch. So 21,450 short-term pivotal resistance level on the Hong Kong 33, and the first intermediate support level to watch will be 20,840. All right, over here. So during the start of tomorrow's Asia session, the market will reopen. That means i.e. at around this 9 a.m. Singapore time or 9:15 a.m. Singapore time. So watch these two levels very closely. Only a breakdown below 2840 will increase the probability of a trend bearish bias on the short term to expose the next intermediate support level at 20,280 next. Right. Next up will be the Japan 225 or the Nikkei 225 over here. So the Japan 225 and the Nikkei 225 is open for market today. So it continues to trade in a sideways fashion between our neutrality zone that we highlighted on last Thursday. So no change, still maintain that neutrality zone between 35,190 slash 35,730. Lower limit will be 33,440. So if we start to see a very clear hourly breakdown below 33,440, then this probability will increase that the rally that has taken shape from 7th of April low all the way up to the 10th of April high. This is more like a bearish flag formation or a dead cat bounce. We call it from a non-technical perspective speaking. That means a breakdown below 3,340 will potentially initiate a bearish flag breakout scenario where potentially the impulsive downward sequence may resume on the Japan 225 based on this technical analysis perspective. So an hourly close below 33,440, lower limit of our neutrality range bias for today may expose the next near-term support level at 32,425. Below it may revisit the minor swing low of Wednesday, 9th of April at 31,350. So still maintaining that intraday today, still so for today, still maintain that neutrality stance between 35,190 slash 730, and the lower limit will be at 33,440. 33,440. All right, so watching the lower limit at 33,440. Next up will be the Germany 30, representing the German DAX over here. So the German DAX continues to trade in a various sideways fashion, still holding below the 20-day moving average, and that is now soon to be in line with the pivotal resistance that we highlighted on last Thursday at 21,610. So still no change, still using 21,610 as my short-term pivotal resistance level, maintaining that intraday bearish bias on the Germany 30. And also we start to see the hourly RSI starts to print a lower high as well, right, indicating the lack of upside momentum as we are speaking right now. So first support level to watch will be 20,890. Only a breakdown below 20,890 may increase the odds of today's trend bearish bias to expose the next near-term support zone at 20,210 slash 19,970, which confluence with the 200-day moving average as well. However, if we start to see an hourly close and a break up above the 21,610 short-term pivotal resistance level, today's intraday bearish bias will be invalidated to potentially see another round of extension in terms of this mean reversion corrective rebound that is still in that will be still in place this 7th of April to expose the next near-term resistance level at 22,240. We saw confluence with the 50-day moving average, I think as a similar level of resistance as well. So i.e. in a nutshell, given the bearish observation that's been seen on the hourly RSI that potentially depict a lack of upside momentum as price action continue to trade sideways between our pivotal resistance level at 21,610. So we will maintain today's intraday bearish bias with the first support level to watch will be at 20,890. So next up will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30 plummet much more weaker than the other major US stock indices. So this was last Thursday closing price on the major US stock indices. So the Dow Jones Industrial Average is the worst performer, down by negative 1.33% over here, whilst the rest of the other major indices fare almost unchanged. On the SPX, only up by marginally 0.13%. The Nasdaq is up almost unchanged, I would say, pardon me, and the Russell 2000 outperformed by 0.9%. So the reason why the US Wall Street 30 underperformed because of its heavy weighted stock, its most heavy weighted component stock, which is United Health, reported I would say that its earnings its Q1 earnings came below expectation, and that stock saw a sell-off because it's being the most heavily weighted stock in the Dow Jones Industrial Average, given the fact that US Wall Street 30 is in our platform, it's a representation of the US Dow Jones Industrial Average. So that causes the Dow Jones Industrial Average to be the worst performer among the major US stock indexes on last Thursday. So with that, over here with this breakdown of this first support level previously at 39,080, we will now have a tighten short-term pivotal resistance level. Okay, let me tighten the short-term pivotal resistance level to this level here, which was Thursday swing high. Okay, Thursday European session swing high at 40,070. Okay, so let me put it this one over here. 40,070. Okay, so this will be my Titan short-term pivotal resistance level, 40,070. So this will be my next resistance level. Okay. Okay. So with that, as long as this Titan 40,070 short-term pivotal resistance level is not surpassed, we will still maintain our intraday trend bearish bias on the US Wall Street 30. Near-term support level to watch out for today, 38,460, followed by 37,900 next. And also the RSI continues to remains bearish as it continues to trend lower with a lower high, and there's still no form of a bullish divergence that's being formed yet. All right, no clear bullish divergence. So with that, still maintaining that intraday bearish bias using a Titan key short-term pivotal resistance for today at 40,070. Only a push up and an hourly close above 40,070 may negate today's bearish bias to see a potential a squeeze up or a mean reversion rebound scenario unfolding, retesting the next intermediate resistance at 40,760 / 41,180, which is so close to that downward sloping 20-day moving average. Right, so that's for the US Wall Street 30. Next up will be the Nasdaq 100. So the Nasdaq 100 RSI still remains weak, continues to flash out a lower high below the 50 level mark, so indicating that downside momentum seems to be still intact on the shorter term on the US Nasdaq 100. So given that it hasn't broken below the 18,125 first support level that we highlighted on last Thursday before we go for our Good Friday break, we'll still maintain that intraday we will have this short-term pivotal resistance over here, which is adjusted down slightly, but not which is correspond to the downward sloping 20-day moving average at this 18,820 level. Okay, so as long as any bounce that does not surpass above 18,820 short-term pivotal resistance for today, we'll still have that potential, maintain that potential intraday trend bearish bias for the Nasdaq 100 below 18,125. A breakdown below it may expose the next near-term support level at 17,410. Only an hourly close above 18,820 may potentially negate today's intraday bearish bias to revisit the minor swing high area of 14th of April and 10th of April at 19,090 / 19,280 next. Right, so that's for the Nasdaq 100, still maintaining an intraday trend bearish bias for today with an adjusted pivotal resistance level at 18,820. That sum up the intraday technical outlook on the major stock indices. Now let us proceed with towards the commodities market for their various intraday technical, for their respective intraday technical outlook, starting with gold XAU / USD. So for gold XAU / USD, price action rallied. As I mentioned, it continues to print fresh all-time high. There is no signs of any bullish exhaustion yet. The RSI just rebounded up from this support level over here and this previous support level. All right, okay, bounce up and hit the overbought level, but it hasn't formed any bearish divergence yet. So given the fact that it's not at the overbought level, there could be some form of a minor pullback as the European started during the European session over here. So first minor pullback support level to watch out for okay, will be this minor swing high of 17th of April, minor swing high of 17th of April during the start of the US session, down turns into a intermediate pullback support at 33.44, right? 33.44. So I'll be using this inverted V-shaped minor bullish reversal tipping point, the low tipping point here, which is at 32,870, 32,870. So this will be my new Titan short-term pivotal support level for today on Gold XAU/USD, 32,870 over here. And this will be my next support level to watch. All right, so oops, sorry. Okay, so this first resistance has been met, 33,072. Next one coming in will be at the 0.674 Fibo extension, which is 3,414, then followed by 3,482 next, which is the one-time Fibo extension over here, 3,482 next. Okay, let me put it in writing so that you guys could have a better visualization. 3,482 over here, and we do a Fibo extension cluster taking from the latest price action that's being formed on last Thursday by you starting from the minor swing low of 14th of April, Monday. Oops, it's the Fibo extension, not retracement. Last Monday, push it all the way up to the last Thursday minor swing high and plot it down from the low of last Thursday US session low. And you realize that that also confluence with the 1.236 Fibo extension as well, which is very close to the one-time Fibo extension from the previous, taken from the previous, the prior minor swing low of 3rd of April. So this is called Fibo extension clustering, trying to find out what are the levels that is being pinpointed by, what are the similar levels that's being pinpointed by different Fibo extension levels. So this one time taken from the previous, from a different minor swing low of 8th of April, and this 1.236 time taken from the much later minor swing low of 14th of April, incorporating the latest price action that's being formed on last Thursday and last Friday. And last Thursday and last Wednesday, pardon me, was Friday. There is virtually no trading. All right, so this is 493. Okay, 493. Okay, so I tidy up everything. So since there is no clear signs of a bullish exhaustion that's being depicted on the RSI only hit the overbought level. So there could be a potential minor pullback taking shape during the European session. Pullback support level to watch will be the former minor swing high of last Thursday and European Asia session high, and former minor swing high on last Thursday European session high now turns into a pullback support at 33.44. But I don't put it so tight for my pivotal resistance, pivotal support level over here. So I'll use a slightly lower level at 32.87, which is much more important because that is the tipping point of the inverted V-shaped recovery that took shape on last Thursday US session. All right, last Thursday US session. So 32,087 over here, 32,087 will be my Titan short-term pivotal support on Gold XAU/USD, still maintaining that intraday potential bullish trend bias. Next resistance to watch 3,414. Above it may open up scope or may see the next intermediate resistance level coming in at 3482/3493. Only an hourly close below 3287. Short-term Titan pivotal support will invalidate today's intraday trend bullish bias to potentially kickstart a mean reversion decline scenario, exposing the next near-term support level at 32,000, followed by 3211/300196 next. So that's for Gold XAU/USD. So up next will be the West Texas crude oil. So West Texas crude oil in today's Asia session got a bearish reaction of the downward sloping 20-day moving average over here, and the RSI also exited from its overbought level, all right, after hitting it on last Thursday late US session. So with that, I'll be using 6540, pardon me, 6540 as my short-term pivotal resistance for today for West Texas Oil. Have a potential bearish trend bias for today for West Texas Oil. First support level to watch will be this former minor range high of 10th of April and 14th of April now turns into a first intermediate pullback support at 62.39. Okay, 62.39. Okay, a breakdown below 62.39 may expose the next near-term support level at 60.08 next. All right, so this is the two intraday levels to watch out for today on West Texas. Intraday support level to watch out for West Texas Oil if the 6540 short-term pivotal resistance is not surpassed to the upside. But however, if we start to see a push up and the hourly close above 6540, today's intraday bearish bias will be invalidated to potentially kickstart the extension of another mean reversion rebound scenario unfolding, exposing the next intermediate resistance level at 68.05, which is correspond towards to the 50-day moving average. I think it's the same resistance level as well. Above 68.05 may see 70.42 next, which is the minor swing high area of 3rd of April. So that's for West Texas crude oil. Watching out the 6540 short-term pivotal resistance for today, which is the downward sloping 20-day moving average, in order to maintain a potential intraday trend bearish bias. And also, that's also sum up the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today on the 21st of March? So today, 21st of March will be 21st of April, pardon me, I'm talking a bit of tongue twisting. So for today, 21st of April, Monday, will be a rather quiet day because it's Easter Monday, so the markets are closed in UK and Europe, and they will market will be open in the US session. So in the US session, one key economic tier 1 data to look out for will be the Conference Board Leading Index. So that represent a form of a leading economic indicator that have a gauge on the economic growth prospect in the US economy as being compiled by the Conference Board. So they'll be out at 10 p.m. Singapore time. So month-on-month, market is expecting further deterioration to negative 0.6 for the month of March, from a further deterioration from negative 0.6 month-on-month from negative 0.3 in the previous month of February. So do take a look out for this, because this is considered as a tier 1 economic data out at 10 p.m. Singapore time. Then thereafter, we will have a rather quiet session during the entire US session for today. So with that, let's sum up today's Daily Dose of Market Insights. I'm Kelvin here signing off, and we shall speak again tomorrow, and do have a great day ahead.